So let's get this started. This is NQ today, 4/18/24. Taking a look at ES really quickly. This is kind of how I form my bias. I base it off ES sometimes I just base it off NQ, and whether it's ranging or trending today. So my initial bias was actually bullish, and the reason it was this low right here on ES respected this low, meaning it didn't go beneath this low right here. It was basically a divergence between this high, and then if you go on ES, you'll see that the exact same thing was this, and it actually went lower. A lot of times you'll see ES like push down to a low like this, then you look at NQ, and it actually will break that low and then continue up. So I put a lot of bias based on ES compared to NQ, because NQ and YM tend to follow ES. Most of the time it's NQ that grabs the low, meaning it breaks the low with a wick or whatever, and then continues the other way, while ES respects it. So it's not always the case. There's sometimes where NQ respects the low and ES doesn't. But initially my bias this morning was bullish. So let's take a look at when did it all start. So didn't trade any of this chop. I was actually trying to get in long all the way up into take a look at the 15-minute zone right here. So this I saw as being respected short. The first point of rejection could have been here, but it did technically tap, so I wasn't keen on seeing this. And because this low got wicked on the higher time frame, I wasn't looking to continue short from any of this. I expected this to get ran, and it did. And so we take a look at the 1 minute. I was looking for continuations, and I simply could not get any. Looking for a continuation here. To see, did not take any trade. Looking for a continuation here. That never came back. Looking for a continuation right here. And never came back. And finally, I ended up taking a trade at this lower zone right here. And then I believe we can take a look at this one as well. All I know is I also took a short today as well, based off the 15-minute close. And so a good rule of thumb for me is I'll look at and pay attention to the 15-minute close. So if it taps this 15-minute zone and then closes this bearish right here, I expect this to at least being respected to most likely down here at least. And on this, it doesn't look like a lot, but there's a lot of moves in here that you can kind of capitalize. If you take a look, most of the time at least, there's nothing here too much. There might have been a lower time frame zone right here, but if you didn't get into the initial moves up here, then you're kind of out of luck. Maybe a quick short down, but I guess if you look in it, it didn't actually have any moves. But there's a lot of price you could have taken shorts in a normal day. This is pretty sloppy, to be honest, though. So my initial long, if I remember correctly, was here. I believe this looks better on the 30-second. Let's go back there. No, it doesn't. Maybe it's a 15-second then. Yeah. So when I'm buying, I prefer the black candles over the white ones. Not that color matters. Fuck. I no longer sound like a trader. I sound like a politician. But you can see like the longs pushed in, came in, ended up taking profit, like I believe like right around here. Ended up not being like that much RR, and then netted me like 200-ish. I think it was 1 to 2. Yeah. I then took this trade long right here. Even though we're in a 15-minute bearish zone, I wasn't paying attention to the higher time frame stupidly. And we can see that this long was pretty dumb. I'm not gonna lie. Not necessarily dumb, like it followed like rules, but I should have been paying attention to this. This zone got wicked, meaning this zone is most likely gonna get ran, and that's what actually ended up happening. Let's go on the 5-second. Let's check it out. Actually, I don't even believe I confirmed this. I think I just took it straight up. But I mean, there was a confirmation. Push up, come back. Actually, no, there wasn't. Apologies there. But go back. Take profit was before this 15-second zone. Slapped it perfectly. I mean, like, this is another thing. Like, a big thing is taking profit at like points of rejection, which would have been this one, and this is ultimately what ends up being the thing that pushes us down. If I were to take trades, this short was the most ideal of the day, compared to the longs. Long here, long here. I mean, at least at this point in time, the longs were great up until this point. My higher time frame bias played out perfectly. I just didn't see the 1 minute on the higher time frame. When you can get reactions from either side of the zone, you can trade counter trend and still be profitable. But it's just knowing when to do it. And this wasn't a terrible trade. The take profit made sense, especially considering where we were. I didn't know at the time where we were, to be honest. But taking profit here above this zone, or before this zone, made sense for the plan. I was already up with this 2R, banked another 1.5. Closed the day at like, I believe like $450 profit, which is pretty good. I like to aim for like 200 to 500 on a perfect day. Those are all my trading day trades. This trading day, I'm just gonna kind of go over the day and see what there could have been potentially, like kind of like a little showcase. We're going bearish. Doesn't take a genius to figure that out. Probably would look short at this 1 minute. It gets blown through. Nothing would have happened there. I would not like to go short here because you can see that didn't actually close below these lows right here. It matched it and then wicked a little bit lower. So I like to see a body break, like body break, come back, 5 second. And then that's about it. We can go back there actually. Where was that? Sorry. 935. 935 is right there. Potentially you could have gone short. See it wicks highs. Absorption. I don't really use that rule for the 1 minute, but you can actually see it did kind of respect. Wick the high. Came back into some lower time frame zone. It can't push out this high right up here. And then minor break, push up. Basically is what I'm saying is push up like this. Can't make this high, but it does this, comes back, kind of retests something in there, and then breaks lower time frame stuff. And there's a gap right here. Zone would have been this. Could have taken this straight up like this. First target would have been here. We take that like that. Next target would have been most likely here or the low at this point. And then you can see it kind of just runs right through it all. So that is potential. I don't take this absorption rule with the wick highs on the lower time frame, especially the 1 minute. But it does work. Like it's definitely like tried and true. I just find it easier to stick to something a little simpler, whether deciding like discretionary, whether I should decide to choose this or not choose this. Follow the 1 minutes. Very unlikely we got an entry here. It looks like maybe on the 5 second it tapped the zone, didn't break, and then wicked the high and then came down. We'll see. Yeah, maybe that's what it's looking like, to be honest. 15 second maybe. Yeah, so straight up you could have just taken the 15-second zone. The better entry was tap into the zone, comes back, wicks this high, and then you just sell stop the candle low like this, stop above the high. Target wise, there's really nothing, here. No gaps, no nothing. So I mean, you could fucking just play some support and resistance and see what ends up happening. I mean, it's whatever you want to call it. Like, I mean, there's nothing here but support and resistance, whatever. I'm not saying it doesn't work, but targeting makes sense like that. There's a lot of fuck around here. So, I mean, usually at 1 to 2 or 2 plus R, I look to exit. So, a good example of like a place to exit would actually be down here. Pushes down, comes back. Where does it come back into? The sell zone right here. And then when this candle wicks this low, this being a buy zone, and shows some sort of rejection, boom, you could be out at that 2.5R. It ends up going lower, but you don't know that. You're kind of just reacting to current price. Taps back into here and then just continues lower. So you would have been fine if you just held on to it, but personally, I'm not going to hold on to a trade like this for 22 minutes of just sideways movement. I'd rather just take my 2R and just walk away. And then if you still held it somehow, after you see this wick rejection on this buy zone, you better be out of the damn trade. Like, at that point, you're just kind of hoping instead of going off of like actual price action. But if you're profitable just taking that shit, go for it, I guess. I'm not. 1 minute zones, mark this out. Nothing. Mark this 1 minute zone out. It doesn't look like there's an entry. It looks like it just zoomed up, came back down. Is what it is. I'll mark this again. Absorption, wicks the highs. Still technically valid if you want to trade like that. I just find it easy to filter out these kind of trades. And so, you honest to God wouldn't even have an entry here. Push up, come back. Your 10 second or 15 second would look better. Right here. Push up, come down. There's this zone. Basically kind of created like a double top. Then you'd be looking to go short from like over here, in my opinion, and then you wouldn't have ever got it. Let's see if you would have got this. Nope, you also wouldn't have got it. So there is no trade here for me. Next is that second 1 minute zone. I marked this up. I didn't actually take it, but taps into the zone. Boom, rejection, comes back, breaks this low here, breaks this low here. It's like, and then this one move breaks everything, and then we're trying to get in right here. Take this candle. I would see, like, if you look at the 10 seconds, see what looks better time frame wise. Take a look. The 10 second is also the same candle, so that makes sense to put the stop above, something like this. Match the stop one or two ticks above. First take profit is that low right there, 2.86R. And then you could have gone into a re-entry right here, same sort of thing. It looks better on the 5 second. Let's just go back here just to show you guys. Push down, comes back, 5 second. Could have got another entry, same TP. Third entry you could have done, but I would be more inclined to skip this. But if you held it, good for you. You can call this a, like, I don't know, trend line break, comes back, retest, then drops. So if you want to take this short, I guess that works, and then it kind of falls off. Doesn't actually fall off. So this fourth one, I don't like getting in these. I like the first two entries, the best ones. Let's go back on the 1 minute. Let's reset this. And then it started ranging towards the end of the day. Again, for ranging markets, we see shit like this. We're seeing like ranging markets, and then it comes down, and then it's up here, and then everything here, and then go lower, and then like whatever. I'm playing like the outer extremes here, and then I'm trying to play the outer extremes here, or at the time I'm probably trying to play the outer extremes here. And so I'm trying to get into the complete outer extreme, meaning the low zone right here, the high zone right here. I don't like fucking with stuff like this. I simply draw the boxes just to kind of see how my entry criteria works and kind of look at how that looks. But again, this is the extreme low, and then this is extreme high. I'm not trying to fuck with any of the sells or buys in between. The only trade that did look actually kind of good is, again, 1 minute high right here, gets wicked out. We see a break, meaning this zone is valid as hell to take, but I don't think we actually have an entry. This is kind of like toward the end of the day. Love to have gone short either here, or that's about it. There's one little short right here you could have taken, but it's pretty minuscule. But the RR was definitely there. If you can get into small trades like this where you can stack the same risk as something bigger, you have a lot more RR opportunity. You could probably put on like 3 to 4 contracts on that on NQ, which is a lot, but like your first target, if you're looking, first target would be right here. and so you're not guaranteeing an 8.6, but you're taking a 1 to 3 on average, or 1 to 2 on average for these trades. You can aim for a 1 to 8 with the same exact sort of concept. Let's go back to the 1 minute. Let's kind of check out. Here's the 1 minute zone. We'll just kind of take a peek at it. Huge tap and fall off. That zone got ran, so there would have been this zone right here. I don't know if it goes to 1R though. I break even 1R. If it does, this would have been a break even. If not, then it's a loss. Yeah, looking like a loss. It's our first loss. And then again, it breaks down, and then where does it come back to? There's a gap right here. There's a zone right here. You can just take the zone if you'd like. I kind of include the gaps right there. Would have been a good trade. And then we think, what's here? There's this zone, first TP. We could TP here. We take TP on the bottom. I got to understand it's a ranging market. So these, I'm trying to get out of this as quick as possible. I'm not expecting a follow. Like, I'm not following the trend here. I'm following on a small reaction. That's a good 1 to 3 to 1 to 2.8. And ultimately comes down to the bottom. And so this is like a ping pong market. So you shouldn't be aiming for these kind of trades that are falling off. These are like short scalps that you're just trying to take. And honestly, like, you don't even need to take them. Like, you already had a good trending day. If you want to just skip these days and trade trend days, then go for it. Go back to the 1 minute. Take a look at the top. Right up here, it looks like shit. To be honest, probably 1 or 2 losses. Yeah, it looks like a loss. So, if we're being honest, taps into this buy zone right here. You should be bearish. The only way you would have gone to a trade is if you're paying attention to the 1 minute. Taps into here, rejection, wicks this high, meaning this is following my entry criteria. Take the candle low right here. Then your first target would be this opposing zone like that, 2.7. I don't know if it runs down there. Okay, it actually does. I didn't remember. But if you're just looking at the 5 second, it's kind of why you got to pay attention to different time frames. You would have most likely taken, let's go like a 15 actually. Most likely would have gone short initially from right here. So that's your first loss. You're basically taking this loss and the other loss back to back almost. If you're not paying attention to the 1 minute, it's kind of like, I don't like entering 1 minute trades for entries, but this is just pretty perfect. And then if you didn't enter the 1 minute, you look for another 5 second breakdown, and it just never comes back. Only trade I would have gotten into is potentially this one right here. Which again, after this fucking breakdown right here, first TP would have been all the way here. Because it's the first zone that's not mitigated. Unless you were to take, actually no, it probably would have been this one, sorry. But if you can take this small of a zone and stack 3-4 contracts on this, you're not guaranteeing, but your RR for this zone and this trade right here is a 1 to 5. Sort of similar to what like is before, it just happens to be really good. Because you can see it taps into this sell zone again, and then it respects and comes back up from here. And then you get the fall off move, and then it comes down to your ultimately. 1 minute long, we'll take a look at that. Sort of a double bottom, sort of the same thing we're kind of going over before. Not an entry signal for me, for the sole fact that it didn't break this low with a wick like this. Didn't do that, so there was no entry long here for me. I would have been looking long pretty aggressively. It would be a good aggressive long would be from here or tap back in. But if not, I was looking for a break at this high, come back, and then continue. So no entry there, most likely. Probably just missed it. It is what it is. Don't take a trade if it doesn't match my entry criteria. Almost second to last one. This zone again, it's the extreme at this point. Take a 5 second right here. See what ends up happening. No, higher time frame. So the reason I'm at a higher time frame is there are so many candles at that point. You need to up the time frame to show some sort of like movement, because like while this is technically fitting my criteria, like you see this candle, then you see this high right here get taken out. That's not something like I don't know how to explain it. That's not something that's super obvious. It's got to be like kind of convincing. Like it's not supposed to be like 3 candles back to back that are then doing this. Like this is not something I would enter. This would only be something I would enter on a higher time frame, meaning if it showed like somewhere between like a 15-second or a 10-second, to see the amount of candles. Whereas sometimes when I'm taking a 1 minute zone, it's a really recent 1 minute, and so it's only here for a second. Whereas this is an old ass 1 minute zone, and you'd be looking short somewhere up here after this big fall off. Again, you're playing a ping pong market, so sure, could you have marked your 15-second zone right here and taken short and then banked another 3-hour trade for the day? Yeah, that's possible. Or GTP somewhere over there. Yeah, sure, you could have had that. I would not have been taking this far along. I would have been wanting to see this tap in right here, break, and then take it short. While it did work, it's just not something that's viable, at least for me. You can add like some micros on here if you'd like to take it short, but this is risky for me. The only chance, no, not even. Yeah, then it looks short here, it just kind of falls. We can take a look at a low probability long just for the shits of it. Alright, great example. So we have these lows here. We have a 5-second zone right here. This is a great example of like the wicking I'm talking about. This is a lot more obvious right here. This is not obvious. Like these are like 1 or 2 tick wicks. It's not something I'm taking. You wouldn't even get tagged in here, to be honest. But this is a larger wick beneath, tapped into a 5-second refinement of the bigger zone. Then we take this long off of this right here. This is high probability for me. First TP, it could either be right here or it can be above pretty much all the highs. We're expecting these highs to get taken out because this zone gets like pushed back a little bit, but this would be first TP at the very least. Break even 1-to-1, it never comes back. Ideally, I'd be looking to get this high take in, this high take in, this high take in. There's nothing really over here to the left. Actually, we can mark this out. We go over here, and that could be first TP. First sort of rejection zone above the highs. Makes sense. We could maybe lower it a little bit. Taps. But yeah, this is a trade that makes sense to me. 3 to 4R, and there's these opportunities almost every single day. But yep. Anyways, this is just a recap. I don't expect anyone to really watch these. It's kind of just for me. Just to kind of journal all the progress and stuff I made, and maybe if a few people message me, I send them these videos. But yeah, that's it. Thank you.